Good morning, ladies and gentlemen. My name is Simon Taylor, and welcome to episode 92 of the FinTech Insider Breakfast Show. As you know, in this show, we review the best and brightest from around FinTech and banking every single weekday straight to your homes at 8:30 British summertime. Apart from on Wednesdays when Sam Moll goes live at 3:30 British summertime or 10:30 a.m. in the US for our US friends. Both shows go live here on LinkedIn. Today, I am thrilled to be joined by Aritra Chakravarty, who is CEO and founder of Project Imagine and Dozens. On today's show, we're going to be taking a closer look at banking business models and, of course, the gender gap in technology. Good morning, Aritra. How's it going? You're in a very dark room there. Are you okay? Is everything all right?
Morning, Simon. Yeah, you'd rather have the room dark than the rest of the world, right?
Oh, absolutely. You're bringing light to us with your own lighting there. As always, audience, do remember we love getting your questions. So please leave them in the comment box and we'll get to those questions. What do you want to know about Dozens? And what do you want to know about banking business models, the gender gap in tech? Ask us those questions and we will get them to Aritra. Alrighty, first up, Aritra, can you tell us a little bit more about Project Imagine? Because a lot of people have heard of Dozens, but there's more to it than that.
Yeah, so the company is called Project Imagine, and Dozens is one of our trading names, and Pi1 is the other trading name that we have. So what we've done is it sort of links back to the business model, and Dozens was created to sort of have incentive-aligned consumer banking proposition, and it's going to grow slowly globally because we really need to prove out the business model works in the UK. But in the creation of Dozens, we had to sort of build our own tech and the platform, and that platform is obviously consumable as well by in a B2B use case. And that's what Pi1 does. And Pi1 can be more aggressive, more global. So together it comes together as Project Imagine, which can then, because it owns the licenses, the tech, the employees, we can sort of spin off more brands in the future as we see fit.
So it's almost like you become a hit factory for propositions because so if I've understood this right, Pi1 is the platform and Dozens is the proposition that uses the platform. Why did you do both of those things?
Yeah, I'm going to reuse that hit factory for proposition line for sure. So take off this, but it's Pi1 is the platform and the services that help you create / launch new fintech propositions, and Dozens is the proof point that it works. Why we should do both of them is the existence of Pi1, because it sort of leads to chunky B2B revenues, means Dozens as a consumer brand does not need to make short-term revenue decisions that are actually not in the interest of the consumer. So we can stick to our mission, we can stick to that Puritan revenue model that only does well when our consumers do well, etc. And meanwhile, with regards to Pi1, why Dozens makes a difference is it's our biggest differentiator when competing with other platform providers. Going live is not just, it's not just the stripes, it's all the battle scars that come from being live for 18 months. We have ops models and fraud models and stuff like, it's a continuous battle in the consumer space, as you would know, and sort of building that back into the platform bit and then being able to offer that to other people who use our platform. That sort of is a big differentiator for the platform piece. So I think together it works really well, and I'm surprised it's not been done before.
It is so different going live versus staying live in the banking world, and as you say, the battle scars of banking is hard. People don't expect the fraudsters. People don't. You build this thing to make a better bank, to make something for consumers. You don't expect somebody to come along and try and rip you off. And this is what the big banks have been talking about for many, many years. This stuff is hard. So what have you found doing Dozens that surprised you in building that proposition so far?
Yeah, I think definitely the kind of financial crime elements, because you so often as founders you kind of hear analogies about like your it's your baby, and then you kind of get your baby to the world, and you never think about like fraudsters and financial crime when you're sort of thinking about your baby. So that's a hard-hitting moment, and especially when you see top line growth, and then you go like, okay, how much of this top line growth is because of the proposition, or because there's just people waiting there for new brands to launch? And you need the data systems and the platform that's sort of really, really good on data to be not just retrospectively tell you whether financial crime is being checked, but also proactively prevent it from happening, because the fraudsters continuously sort of try to outwit you as well. So it's quite intriguing and interesting once you have acknowledged it as a problem, and I kind of love dealing with it now. But when you launch, after all the initial hard work of sort of getting something together and getting it to launch readiness, it's not something you expect. And the other bit that we continuously deal with, and I think we do a good job of it, is how do you innovate in a space that's so heavily regulated? It's not the tech kind of break it till it works kind of model, right? You can't break it because there are rules and legitimate rules that should be there. So sort of innovating in that space and keeping that innovation culture going after we've now been around for 2.5 years. It's much easier in the first few days when there are no live customers and there are whiteboards and you're building stuff. Innovating while staying live and keeping the lights on. I've had some experience of it from my prior life as a banker, and obviously innovation takes a hit there and lights stay on pretty well. So keeping lights on and innovating is proving to be challenging as well. But I quite love that dichotomy.
And just remind everybody what capabilities Dozens has in its app today, and who your typical user is. And then it'd be interesting to think about. I don't know if you've got a story of the things you've innovated in there.
Yeah, sure. So let me take a step back to sort of why Dozens even needs to exist, and this is Dozens rather than Project Imagine, right? So I think of banking, and I've said this in sort of many places that I've spoken in. So apologies if it's a bit repetitive, but the crux of it is banking is more or less a platform, right? Depositors, which is people with extra money, meet borrowers, which is people who need the money. So in some senses, in my books, it's not too different from Uber or Airbnb. And those guys keep a platform rent of around 20-25%, and then we think that's pretty high. And banks keep a platform rent of 80-90%. So they only give you back 10% of the money they make off your deposits to you, the deposit holder. So the question is, what's the difference for? And most bankers would tell you, well, we're regulated and there's all these extra costs, and well, that's great, but then you're also subsidized by the government, as in like the taxpayer eventually is the backstop. So really what you're saying is you're regulated and you want to charge the extra bits because there's some kind of fiduciary duty that you have towards keeping money safe. And if you have a fiduciary duty, what really breaks the argument is, why do you do better when I borrow? And it's not me borrowing for building a house or like building a business. It's actually much harder to do that. You'll really let me borrow when I'm on a point of sale, struggling to buy a slab of butter, like it's called innovation if you give me credit then. Or you let me borrow to go on holiday, which I would have spent by next week. And those bits are really sort of incentive not aligned, right? Like in my book, it's the equivalent of a car manufacturer doing better when there's more accidents on their brand. Things of banking that way. So Dozens needs to exist because it's effectively a wealth management platform. We make our revenues from a little bit of interchange, but really when you save and invest with us. So we can look you in the eye and go like, we won't exist actually if you keep borrowing. Our revenue model is based on you doing better, and therefore every proposition in Dozens is about how you start saving. And then the second problem of if you're saving, with inflation, etc., the return you're making on your saving may not be enough in 30 years when you retire. So how do we get investments to a much broader top level funnel when there is sort of loss aversion, right? Most people don't want to lose a pound of savings because it's been so hard. So how do you get them to consider something that might give them 3-4% more? And a lot of our products sort of try to do that. So for example, the 5% per annum bonds that we manufacture ourselves are listed as ISA eligible. We had to create that on our own because being an e-money provider, we can't put interest on the current account. We had to come up with something that would resemble the safety of principal protected investments. And we'll continue to innovate down that line. So the 5% bonds are obviously, because we are effectively subsidizing it, very little amount per month compared to what we could do for the UK market. And we're working on some more structured products, etc., that would open up that. But you can see the sort of constant focus is on how to get you to save and then how to get you to invest. So we call it the spender to saver to investor proposition.
It's a really interesting psychology of you make your money and your incentives when your customer is saving more rather than when they are lending more or borrowing more from you. And actually, the way the market's shifted in the last sort of 3 to 4 months, it kind of puts you in an interesting position. I look at all of the big banks announcements in the last couple of days in the UK, and we see Barclays, Lloyds, and many others putting aside significant sums of money, 1.6 billion, 2.4 billion for loan losses. Actually, in the next 6 months, as we're looking at maybe job losses coming in October and November time, are we in a world where the lending business model is a bit squeezed? Banks almost have, quote, too many deposits, which is a crazy thing to say, but they're in a bit of a strategy problem in the next 6 to 12 months, maybe.
Yeah, and I think the beginnings of this was actually the previous financial crisis. Like the sort of Glass-Steagall and sort of that division between retail/commercial banking and investment banking. I mean, retail's always been deposit rich. In HSBC, sort of the Asian franchise was so deposit rich that like you kind of like if you really go back to the history of HSBC, acquisitions happened because of that deposit richness. So retail being deposit rich is not a new thing. I think what's changed in the last 10 years is just how banks can use that deposit base towards its commercial or other clientele. And now that they have to use it for retail borrowing, they're still probably not yet at the sweet spot of what kind of borrowing would make good use of the deposits. And therefore, you're seeing a lot of these sort of cycles, I think. That's my read of it. It's not substantiated by any academics doing research or anything, but my commercial sense is still probably 5 or 10 years away from a good lending book that is retail only.
It'd be interesting to watch. And do you think the banks are going to look more and more to the model that you're trying to emulate now, which is trying to monetize more the wealth space a little bit? Do you think that will be something, or do you think you've got a bit of an advantage there and a bit of a march on them in being able to do that?
I think it's actually more of a cultural topic, because why do people not invest is basically the question, right? Because as long as the deposits stay on balance sheet, then you've got to sort of lend it out. There's not much more you can do with it as a bank. So I think there's two issues. The consumers don't want to invest because they have this loss aversion. They've never been talked to about inflation and the fact that if they get 1% per annum, they're actually losing money, even in a low inflation economy like the UK, right? And build that out over 30 years, it's a scary picture. The bankers, most of banking executive teams have, and especially in retail banking, have come up through sort of branch networks and traditional retail channels. They've built their careers on loan books, on mortgages, on credit cards, and personal loans. So if you suddenly have a flow of deposits to ETFs, there's no loan book remaining. And that's an inherent conflict because, as we know, 95% of revenue sort of come from these books. So you really have to have a long-term vision and a kind of almost a generational shift in banking executive thinking before you can take on then the challenge of educating the consumer about their loss aversion. So it's quite a few steps before banks sort of change business models. I think it's even harder than them changing tech stacks, I think.
It'll be interesting to see that mass affluent space start to evolve in the next sort of couple of years. I know JP Morgan are looking at bringing Chase Sapphire into the UK, and there may be some market entrants that make that space particularly interesting. Sorry, go ahead.
Go down a level. So rather than banks sort of trying to get to savings and investments, in a lot of our Pi One conversations, we speak to asset managers who are trying to sort of offer wallets and payments so that they can have a broader funnel. So that might be one to watch out for as well.
The shadow banking sector takes up the slack and the gap. That'd be really interesting. Great insight. Audience, remember, keep sending in your questions. We got a couple streaming in, but please send us your questions first of all. Anything you want to know about Dozens, anything about Pi One, anything about Project Imagine or the market generally even. But I want to get on to the gender gap issue in tech as two gentlemen speaking at the moment. The state of male versus employees, male versus female in banking and in tech. It's kind of like a Venn diagram of terrible. What are you guys doing to really help with that?
So as it turns out, we're still, I think, more than 50% women at the company level, and we're certainly 2/3 women at the most senior leadership team, and around 60% in the sort of VP layer. So we have more female leaders than we have employees proportionately, and I think it funnily boils back to a kind of simple anecdote of we've always hired without CVs. We don't like reading CVs because basically it's the one document that you've written for the sole purpose of getting a job, which is not even proof like it's on LinkedIn. So we'd rather just have a conversation, and it's actually amazing just how many men that process seems to throw off. And we ask kind of simple questions, and we like if you write to me on LinkedIn and say I've been looking at this job, I usually go back and say write an email with 4 things answered. What's your dream job at Project Imagine? What would you do? What would you definitely not do? Why Project Imagine and why now? And the answers to those 4 questions gives us more than a scan of a CV could, and then it's sort of lead to a nice interview. And the net effect of all of that process has been that we're very, very high on women, which tells you sort of the subconscious bias things that we've been sort of talking about for a long time is potentially true. And obviously, it's much easier for a startup to sort of implement some of this. And we also have transparent salaries. So sort of it breeds this culture of like questioning. And you can stop me in the corridor and go, why do I get paid this? Well, this other guy who does lesser gets paid that. So it keeps me on my feet. So all of
Yeah.
this is hard for larger corporates to sort of implement. But I think there's some interesting experiments there and some data that they could sort of take from us. And we end up talking about this to our Pi1 clients as well. So it's
It
not
is
like
interesting.
email with a gender focus. We're just there because it's the best people.
Well, yeah, and absolutely. I think the studies are really clear on the talent pool that you're then able to address as a result, and it is absolutely an issue. And I'm interested specifically on the tech side as well, as we know the supply of female engineers is an area that every tech company has really been concerned about. Have you been able to solve for that piece as well? Because I know an organization is a big thing, and there's a lot you can do with different roles and so on. But what about tech specifically?
Yeah, and my view has always been that if you've got 20% sort of female representation in the graduating class, it is statistically impossible to hold quality if you then look for 50% representation in the company, right? Like it's really, really hard to sort of get that 2.5 multiplier. So therefore, we don't look at it at the team level. We know that tech and data is a bit behind. But having said that, I think we work with a lot of Eastern European teams in tech and data, and somehow just from observation, the gender balance is way better there than in the
Mm.
more bits, and that might have some sort of sociological causes or whatever. But like we kind of get the best of both worlds by getting non-tech hires in London and a lot of tech hires in Eastern Europe.
It's an interesting find that you can do as you kind of experiment your way through. And I like that commitment to transparency. There's almost this sense of taboos that people hold around from the last job that they had and things that they couldn't do before. It must have been quite interesting to go in and intentionally try and break some of those taboos. What was the rationale behind breaking those taboos as you set up Project Imagine? What was the thing you went into it with? You obviously mentioned you have a banker background. Was it sort of a response to them or something else?
Yeah, I mean, it's like 13 years of watching and sort of learning and sort of making notes of what to do and more often what not to do. And it sort of gets me out of bed. I'm really passionate about these people topics, and being a founder is a hard job, as you know. Raising funds is not fun. Dealing with fraudsters now is a bit of sort of intellectual fun, but it's genuinely not a thing that you want to get out of bed for. So I
Mm-hmm.
need a couple of these things, and the incentive alignment piece on dozens, and sort of trying to make money while our consumers do better, and then really changing the way people are hired and talent is hired and retained. That's super key for me to sort of deal with the bad days.
Uh,
So selfish.
I'm sure it helps. But I think how you extract joy from your work is actually really, really crucial because, to your point, what does your perfect day look like is the best question I ever got asked in my career. And then it was funny, I wrote it down at 25, and if I look at what I'm doing here at 36, it's uncanny.
Yeah.
So it is weird how once you know what your perfect day looks like, your job sort of becomes it. So top tip, anybody who's watching that's a bit frustrated in the day job. It may sound like a crazy dream, but I think it's definitely something that can happen. Good question here from Abbas Taki, who asks, given Dozens is somewhat customer centric, have you crowdsourced and implemented any ideas that customers then found beneficial?
Sorry, say that last bit again. Given it's crowdsourced.
Given you're customer centric, have you crowdsourced and then implemented ideas that customers found beneficial?
Yeah. And I think it's the Abbas I know. So if it is, hi Abbas, hope you're doing well. It's one of our big bits was we started the whole thing with 300 people across the UK, and we called it the What If community. And this was on day one before I even had a team. Actually, we started this bit, and that's actually ended up in sort of the Dozens map, looking like little yellow dots all across the UK because these guys were consciously sourced from not just London and not just
Mm-hmm.
the sort of tech segments. And they would often keep us on track. Like for example, the bonds. And I'm not a big fan of usability testing pre-live. I like data from like live usability, and so proposition testing is really what we end up doing with the community. And I thought I had a great idea of people need to be educated about financial products. No one's going to understand bonds. Let's just call them trains, and they're going to leave the station and come back with pots of money every month, every year. And the community said, no, we like a lot of the other financial education things you're doing, just do us a favor and call it bonds. We get bonds. And then the other one was, they said our landing page used to be the spend transaction screen. just like most other banks, because that's the most used one. Day-to-day usage sort of affects your DAUs.
Mm.
And they said, look, the way you speak about your brand, I don't expect to see a transaction list when I open the app. So give us something more. And then that's what created Dozens Home, which is now evolving to becoming almost like a Facebook-like money feed that you can come sort of check your insights, and that space is going to get the most of love in the rest of the year for Dozens. So that came completely from our community feedback. And
it's interesting and brave design choices when there's such an established design pattern and there's so much money to be made most of the time, like 90% of the time, doing what's worked elsewhere is the right answer. But 10% of the time, sometimes taking a risk can really make sense if it's customer led.
Yeah, exactly. And you almost like apply a bit of kind of portfolio theory to it. You can't do this experimentation for 100% of the proposition, but if you're sort of stable on 90%, 10% listening to the customers and putting a couple of risk design factors in there is pretty good.
It's worth a go. There's a question coming in live being typed out by Hannah from Dan Feeney, and I always want to get to Dan's questions. He asks, what UK high street bank is best at gender inclusion from what you can see? I guess it's a hard one to answer from the outside.
Yeah, I mean, what I really have no data, right? It's like sort of scanning branches, which is not fair. But I think what I do know is I would be surprised if there's any bank where the pyramid of the gender structure is any different to the one that I worked in. And that's because, just again, sort of back to a lot of sociological bits, like just how women express themselves, compared to we've all talked about these biases, right? So I don't think there's much to differentiate between, and it's not just banks. I think it's just large organizations.
That's a really good point.
As a species, we have to solve how we tackle this in places that are large and where loud voices sort of drown out other ones.
100%. I say that again as two men talking on a show, but I would completely agree. I think creating opportunity is absolutely the goal. So again, ask of anybody watching, if you know some great talent that we haven't had on this show, we're absolutely always on the lookout for it. So please do send.
On that, Simon. So I have actually got no issues with two men talking right now. All I want to know is if there was a woman who deserved to be here and was meant to be here, that she is here. And it's the same for any man, and it's the same for any other sort of race issues and creed issues. Like, it's just the deserving get a chance, and we're not looking for ratios. We're not looking for tokenization at all. Whatever's the right number, whoever's deserving needs to get the shot.
Here, well said. Question from William Bicknell, who said he'd actually misunderstood Dozens until now, which is kind of interesting, and he loves the concept. How many other products have you got in development, and can you share what problems you're aiming to solve?
Yeah, Dozens is actually going through a bit of maturity phase right now. Over the next few months, you'll see us sort of consciously change the website, the look and feel of the brand. We're quite bright mango yellow right now. We're working on some dark black cards because our main mission is to help the mass affluents, as he said. If you're really sort of struggling with your budget day to day, there's only so much an IFTTT tool or a Google Maps spending view or something can help, because you're actually out of money. And I'm very conscious to not make a claim to solving that problem. But if you've started to save, you've got £100, we've got the bonds for you. You've got a bit more, then we start to sort of shelve you the ETF stuff, and we've got across risk levels. So we really need to focus not on the spenders, but on the savers and investors. And if you're spending and just about struggling to save, we might be able to pull you through. So sort of that slightly higher segment then is the typical tech profile, is what Dozens will start focusing on. And you'll see that in the products, the designs. A lot of financial product roadmap is key for us in 2021. So we're almost getting the digital stuff done this year. And of course, there'll be refinements. But 2021, hopefully, if you're still around and doing well, you'll see products that banks don't offer you in the UK market.
That would be really interesting to watch. Products that banks don't offer you in the UK market. I love this journey as well, that you kind of take people on in the proposition. And what about the platform, Project Pi One? I guess it would be, it's not Project Imagine, but Pi One. Where's Pi One going, and what are its goals? You mentioned sort of asset managers. Are they the ideal client for it?
No, we're actually, I'm almost like a bit philanthropic about it. Like, it sounds weird because it's the bit that makes us money right now, but like, as many banks and asset managers and financial institutions around the world as want to access this battle scar database and the tech as they want, is good for us, because it's basically taking our mission across to these places that Dozens could not get to, even if it wanted to, in the near time. So we're very, very open on Pi One clientele. We've got startups, which are greenfield. We've got greenfield brands from banks, and then some brownfield stuff. And all of that's okay across the piece. the vision for Pi1 is basically one of the issues when you're in the banking side is, procuring multiple times, and sort of if the startup doesn't exist and the value of that cost of that experimentation. And similarly for startups who are good at solving a problem, dealing with banks, if you haven't worked there, is not what they've gotten out of bed for. So us being in the middle, the vision would be like some kind of an iTunes store for fintech in the future. Today, we are the ones who onboard the startups and build those adaptation layers so that they kind of fit into our API suite, and we kind of do the implementation for banks. But in the future, I can imagine that just like iTunes, the startups sort of do their own adaptation layers, onboard themselves, and they get onto our platform because it's an easy way to sort of get tested by banks. And the banks onto our platform because they just sort of have this entire suite of experimentation right there.
That's super interesting. We've seen the real emergence as the whole bank as a service space, but they were very sort of monolithic in that they all provided everything. But the reality of being a fintech is your onboarding could be on Fido or on Tentix. Maybe you're working with a Comply Advantage. Maybe you're using somebody else for your fraud screening. Maybe, and there's just a really great series of small fintechs out there who do one thing extremely well, and you need this patchwork of all of them. The guys at Flux and what they do around receipts. That so actually to have a platform with those pre-baked in could be really, really powerful.
Running the consumer governance, that's exactly the insight, that I don't think I can do some of these things better than on-feed and Comply Advantage. So why even try? That's the bit that they do best. They fit into the broader piece. In and of itself, that service is not valuable. It needs to sort of be KYC for something, transaction monitoring for something. So if you build the something and the orchestration, that's really where the value is, because most people are having to build and rebuild themselves.
This is fantastic. We've got about a minute left, so I'm going to leave it with one sort of future-looking question. What's your ultimate ambition for Project Imagine? Where is it in sort of 10 years' time?
I almost see it like, I love the phrase you used before, but like almost see it like as if you're I'd love it in 10 years if you're a bright student of finance or economics or anything else, and you have an idea and you have no idea where you want to go to with that idea, and you think of Project Imagine because it's sort of formed a reputation for executing good ideas, possibly in the financial space, but maybe even more if it's 10 years. That would be a really good.
Alrighty, well, Aritra, thank you so much, and it is coming to the top of the hour, and I'm sure everybody's got days to get to. Aritra, where can people find out more about you and what you're getting up to at Project Imagine?
We have pretty active social feeds. I'm very active on LinkedIn, so if nothing else, just drop me a line there and I'll respond.
Alrighty, thank you so much. That's all we have time for today. I'm sure everybody's got a lot to get on with, but tomorrow we will be joined by the one and only Valentina Christensen from Oak North. So have a great day, everybody. Looking forward to that one. What a great way to do a Friday. We shall see you soon. Enjoy the sunshine if you're in the UK, and enjoy the rest of your day wherever you are. Take care.